Hello guys, in this video we are going to see about US GAAP and IFRS. If anyone not yet subscribed our channel, kindly subscribe. Bookmark. Before globalization, every country using their own accounting standard. Once international trade began, like import and export, they are facing some difficulties in using accounting standard. For example, if a company dealing with import and export transaction, they will face some problem like which accounting standard we should use, whether we have to use our own country's accounting standard or import and export country's accounting standard. There will be a problem creating a balance sheet. So to resolve this, they created the IFRS, International Financial Reporting Standard. They created IFRS. They created the new accounting standard. It is an international accounting standard. Every country began to adapt the new accounting standard IFRS. Suppose if an importer country using IFRS accounting standard and exporter country also using IFRS accounting standard, there will not be any issue in creating the balance sheet and to follow the accounting standard. But USA ignored, they refused to adapt the new accounting standard IFRS. USA using their own accounting standard, generally accepted accounting principle of USA, US GAAP. They are using their own accounting standard. They are telling that if you want to make a trade with us, we have to use our own accounting. We have to use our accounting standard US GAAP only in our country. In additionally, you have to learn with IFRS. Okay. Next, in India also we are having an own accounting standard, which is a very good one. So we can't able to scrap that old accounting standard and adapt the new one IFRS. So we discussed with IFRS and we came into a conclusion that let's compare both the accounting standard IFRS and Indian accounting standard. We will choose some of the best accounting standards from IFRS and some of the best accounting standard in Indian accounting standard. We combine that one and we will form a new accounting standard that we will use in our country. We can't completely ignore our own accounting standard. So here they mentioned INDAS, Indian Accounting Standard, have been introduced. They are converged form of IFRS. Converged means some of the accounting standards are chosen from IFRS and some are our own accounting standards. We converged that two accounting standards to form the INDAS. Okay. Totally there are three accounting standard. The question is whether we have to learn all these three accounting standard. Yes, let's see how. Let's consider our bank. Our bank is situated in India, so we have to learn Indian accounting standard INDAS. Our branches is also located in overseas in other countries, so we have to adapt the IFRS accounting standard if our branches are in overseas. Next, our branches will be located in US also, so there we have to use US GAAP accounting standard. So to create a consolidated final balance sheet, we need to learn all the accounting standard. Now we will see in detail about US GAAP and IFRS. In United States, public company and private company use US GAAP as an accounting rule to prepare financial statement in case of local and state government also comes under generally accepted accounting principle GAAP only, but under a different set of assumption which is known as Governmental Accounting Standard Board GAAP. In case of profession, accounting principles are set by FASB, Financial Accounting Standard Board. So, for public and private company US GAAP, for government GAAP, and for professional FASB. GAAP is not a written law, but US Security and Exchange Commission SEC requires that every company should follow the GAAP as an accounting standard to create financial reporting. SEC is nothing but in our country stock market are regulated by SEBI. Likewise, in US stock market are regulated by SEC. GAAP is differ from International Financial Reporting Standard IFRS. GAAP is somewhat differ from IFRS. What is the basic objective of US GAAP? The objective is to provide useful and helpful information to potential investor and creditors. What are the fundamental qualities? First one, relevant. It should provide the relevant information to investor and creditor so that they can able to make a clear decision. Next one, reliable. When, for example, when two auditors using same method, then they should get the same result only. If you recheck n number of times, the result should be same only. There should not be any deviation. This is known as reliable. Next one, comparable. Every company in US should use the same accounting principle, US GAAP only. Then only we can able to compare one company to another company. We can able to compare whether it is good or not. If each and every company using different accounting standard, then we can't be able to compare. Next one, consistent. You have to use same accounting method for the every period. For example, in a company, that depreciation method so far used is straight line method for 2 years. In third year, you can't be able to use write down value method. We have to use same straight line method only. Suppose if you want to use the write down value method, we have to provide an explanation and justification. So consistent. In every year, you have to use same accounting method only. Next one, setting GAAP. In this, we are going to see about how GAAP is created. SEC was created because of Great Depression. At that time, there are no structure about accounting standard. So, SEC decided to create a new accounting standard through the body AICPA. AICPA means American Institute of Certified Public Accountants. But this body can't be able to create an accounting standard. Later, FASB. Here it is a printing mistake. It should be FASB. Later, FASB created the new accounting standard. In 1939, that AICPA body created the committee known as CAP, Committee on Accounting Procedure. During the year 1939 to 1959, they created 51 research bulletins. But however, every time they are facing problem by problem. If one problem resolved, there is another problem. So they can't be able to adapt this 51 research bulletins. So in 1959, AICPA created the board, in Accounting Principle Board. This mission is to create a conceptual framework. So they provided the 31 opinion, but they can't be able to use after 1973 due to the lack of productivity and failure. So after 1973, they dissolved and they created the FASB. FASB means Financial Accounting Standard Board. So this FASB only created accounting standard finally, which is known as GAAP. In case of government, it is known as GASB. So finally they said that until FASB or GASS set standard, you can use the existing APB accounting principle board. You can use the existing things as guidance on financial reporting topic. Until that new FASB going to set an accounting standard, we can able to use the existing one as just in guidance. This is about GAAP structure. What are the department inside the house of GAAP? Next we will see about overview of IFRS, International Financial Reporting Standard, which are formed as a global language for accounting. So we can able to compare the companies which are situated in different countries. So there is no international boundaries. What are the principal objectives of IFRS? The principal objective is to develop the high quality and understandable and accepted globally by everyone. And second one is to promote and use this standard. And third one, whether the company is small or medium or SME, anything, that everyone should use this accounting standard. And fourth one is very important, to promote and facilitate adoption. Everyone should adapt the IFRS. Next we are going to see difference between US GAAP and IFRS. They are provided a table. It will make you to understand very clearly. GAAP is an accounting standard used only in US, but IFRS is used in 144 countries as on data of 2018. GAAP is considered as a rule-based system, but IFRS is a principle-based. And one more important difference is GAAP provides separate objective for entity and business, a non-business entity, but IFRS is provide same objective for all the entity. First difference, definition. GAAP is used only in any given jurisdiction. It means GAAP is used only in US, but IFRS is global language. So we can able to compare the company accounts across the country. There are no international boundaries. Across the international boundaries, you can able to compare. And what are the purpose of framework? For example, if there is absent of standard, or we can't able to interpret any issues, there is no provision in GAAP that it should provide a framework to resolve the problem. But in case of IFRS, if there is no standard and they can't able to interpret any issue, IFRS has a separate framework to resolve the problem. Next one, underlying assumption, going concern. Totally there are two concern. One is going concern. First one is gone concern, and one more thing is going concern. Gone concern means it's over. Going concern means it's a continuous process. Everyone will like to run their company continuously, so everyone want their company should be a going concern. But in case of GAAP, the assumption is not well in GAAP for going concern, but in case of IFRS, the assumption are accrual. Accrual means till date, and it will be a going concern. Objective, as we seen earlier, it provides separate objective for business and non-business entity, but in case of IFRS, it provides a same objective for all the entity. What are the quality characteristics? In both GAAP and IFRS are same only: relevant, reliable, comparability and understandability. But the small difference is GAAP established, it means relevant and reliability as in primary quality, comparability is secondary, and last one, understandability, will be based on the user specific quality. But in case of IFRS, all the four components has the equal importance. Next one, definition of an asset. In GAAP, they will consider something as an asset. It should provide some benefit in future economic benefit. But in case of IFRS, they consider something as an asset, like it should be a resource. From that company should get a regular flow of benefit, future economic benefit. So they are considered something as an asset, should be in resources. Next, fixed asset. Fixed assets such as property, plant and equipment are used using cost model in GAAP. Suppose we are purchasing a machine of worth 10 lakh. After 3 years, it will be depreciated to 7 lakh. But in case of GAAP, they use 10 lakh for accounting. But in case of IFRS, they are using revaluation model. So they use 7 lakh in accounting. So using the same value on what we purchased is known as cost model. Revaluation model means on the particular date we are writing the value of the machinery. Next, inventory valuation. In GAAP, they are LIFO, loss in first out and weighted average cost. In case of IFRS, they are using only two, first in first out and weighted average cost. And last one, intangibility. Intangibility asset means something that we can't be able to touch and feel, like R&D and advertising cost. In GAAP, they provide some fair value in intangible asset. But in case of IFRS, they only recognized only their future economic benefit, something we need to get benefit in future. Then only they will consider, then only they will provide a fair value in case of IFRS. In next video, we will see about transfer pricing. It's very important. Most of the questions asked in transfer pricing. Thank you for watching video. If anyone not yet subscribed our channel, kindly subscribe, bookmark.